Happy Monday, tech enthusiasts. Welcome to the Tech Stocks Daily Podcast, your go-to for the latest twists and turns in the tech market. Today, we're peeling back the layers of Apple's latest AI delays, the strategic moves that have everyone buzzing, and how their stock's doing this roller coaster year. Plus, grab your popcorn. MongoDB's in hot water with not just one, but 3 securities fraud class action lawsuits. What went wrong? We've got all the spicy details. Stick around to find out if you should buy, sell, or hold your tech treasures. Let's dive in. Hey tech enthusiasts, let's dive into today's sizzling hot tech news buffet. Apple's been causing quite a stir, so let's serve that juicy Apple platter fresh off the grill. First off, Apple Inc. has delayed the launch of its much-anticipated AI feature suite, Apple Intelligence. Originally expected to roll out in September, it's now bumped to October. So, why the delay? Well, Apple's focusing on stability and performance to avoid any AI fumbles, aiming for a smooth, impeccable user experience. This powerhouse suite is designed to revolutionize text and image creation with cutting-edge generative AI capabilities. We're talking about transforming the humble Siri into a more functional digital butler, revamping how notifications bombard, notify us, and even letting users mirror their iPhone screens on their Mac devices. Essentially, Apple Intelligence is set to make your devices harmonize like a symphony concert instead of an off-tune garage band. Second, there's strategy behind this delay. Apple is playing the long game. No rushed launches with half-baked features here. It's all about premium performance. This strategic move is also aimed at pushing those device sales back up, since they've been a tad sluggish of late. To stoke the fires of anticipation and app readiness, Apple's already slipped beta versions of iOS and iPadOS 18.1 into the developer community. Developers, get ready to tinker, tweak, and test your apps to perfection. Now what about the stock market? Apple's journey this year has been a wild roller coaster. After peaking earlier with a stellar 23% growth, it's now cruising at a more modest 13% year-to-date. It hit an all-time high at $237, but dropped nearly 8%, signaling a cautious cooldown. As of Friday, July 26th, Apple closed at $270.96, inching up by a gentle 0.22%. Financial wizards are speculating about support levels forming around $200, potentially making it a key rebound zone. Investor sentiment is cautiously optimistic, especially with the looming Q3 earnings report due on August 1st. Could this report be the magical potion to boost that stock price, or will it deepen the slump? The suspense is palpable. Speaking of earnings, Apple expects a shaky but optimistic financial report, projecting revenue growth in the low single digits. Estimates peg those third-quarter revenues at around $84.2 billion, reflecting a 2.71% yearly growth. The earnings consensus, a hopeful $1.34 per share. Apple's performance in the iPhone segment presents a mixed bag, a drop in sales, especially amidst fierce competition in China. Local brands like Vivo, Huawei, and Xiaomi aren't just playing, they're winning. Meanwhile, Apple's market share there fell from 3rd to 6th place. But it's not all gloom. The service segment, featuring Apple TV+, Apple Music, and other gems, continues to flourish with over 1 billion paid subscribers. Macs show solid growth too, jumping to an estimated 8.8% market share compared to 7.5% last year. And yes, those shiny new AI features in Apple Intelligence still have folks tingling with excitement. In short, Apple's juggling a lot right now. Delayed launches, strategic plays, market share battles, and financial reports coming down the pipe. Can Tim Cook's squad blend all these ingredients into a winning tech souffle? Only time will tell. Stay tuned as we nibble through this tech drama together. MongoDB is in the news today for all the wrong reasons, folks. Grab your popcorn, it's about to get interesting. If you've been following MongoDB, you'll know that the software company has found itself entangled in not 1, not 2, but 3 securities fraud class action lawsuits. Yes, you heard that right. 3. Here's the gist. It all started with an investor rights law firm, Bernstein Liebard LLP, who kicked things off by reminding MongoDB investors of an upcoming deadline for a class action lawsuit. This stems from allegations that the company and its officers violated the Securities Exchange Act of 1934. Investors who purchased or acquired MongoDB securities between August 31st, 2023 and May 30th, 2024 are being encouraged to step up as lead plaintiffs by September 9th, 2024. And who wouldn't want to be a lead plaintiff in this roller coaster? Hot on the heels of Bernstein Liebard, another firm, Hagens Berman, urged MongoDB investors who have suffered substantial losses to submit their losses now. Why? Because MongoDB revised its fiscal year 2025 revenue guidance twice, causing hearts and stock prices to plummet. The first hit came on March 7, 2024, when the company attributed a decline in revenue to a restructuring of its Salesforce compensation model. The result? A significant stock price dip. But wait, there's more. On May 30, 2024, another bomb dropped. This time it was blamed on macroeconomic factors affecting customer adoption and ongoing sales restructuring impacts. The cumulative effect? Shareholder value diminished by a whopping $7.5 billion. Bringing up the rear, we have Kessler, Topaz, Meltzer, and Check LLP making a splash with their class action announcement. They're pursuing a lawsuit alleging that MongoDB made fraudulent misrepresentations and omissions that misled the public. This led to investors experiencing significant losses and stock prices taking a nosedive yet again. Do you see a pattern here? The class action complaint is now in the United States District Court for the Southern District of New York. And if investors want to step up as lead plaintiffs, they've got until our magical date, September 9th, 2024. So what's the takeaway? It appears MongoDB's attempts at revitalizing its sales strategy and compensations backfired in a monumental way. Investors are now questioning the reliability of the information provided by MongoDB's executives, leading to massive lawsuits. But hey, enough about what we think. We would love to hear from you. What do you make of this swirling storm around MongoDB? Were the Salesforce restructuring initiatives overly ambitious or just poorly executed? Do you think MongoDB can bounce back from these back-to-back legal challenges? Leave your comments below, and don't forget to share your thoughts. Let's get the conversation rolling. All right, tech aficionados, it's time to talk strategy. Let's zero in on Apple for a moment. The big question, would I buy, sell, or hold, given today's sizzling updates? So let's break this down. Apple's had a bit of a rocky ride lately, delaying its groundbreaking AI feature suite, Apple Intelligence, which was expected to shake up the tech world this September. Combine that with a roller coaster stock journey and heating competition, especially in the China market, and you've got quite the cocktail of events. Given the current scenario, I'd lean towards holding Apple stock. Here's why. 1. Delayed AI features. The delay means Apple is focused on delivering a polished product rather than rushing out a half-baked one. Quality over speed suggests a more stable long-term uptake and potentially stronger user satisfaction. 2. Growth strategy. Apple's strategic play with its AI could mean a significant bump in device sales and service subscriptions in the near future. They're planting seeds for a lush harvest down the road. 3. Market performance. Despite recent dips, Apple is still a tech behemoth with a resilient stock price. Support levels around $200 could imply a solid rebound potential. 4. Upcoming earnings report. The Q3 earnings report due on August 1st might reveal some golden nuggets, possibly lighting a fire under the stock price. The gods of Wall Street can be incredibly responsive to even slightly better than expected earnings. Number 5. Services growth. Apple's more than a hardware company. Its services segment is thriving. Over 1 billion paid subscribers across its services mean recurring revenue and ongoing customer engagement. But remember, friends, my advice is only the appetizer. Dive deep, research thoroughly, and consider your own financial situation before making any moves. Apple's a titan, but make sure your investment ship is ready for any stormy seas ahead. What do you think you'll do? Buy, sell, or hold? Let me know in the comments below. Do your homework and happy investing. Wow, what a whirlwind day on the NASDAQ. Apple's marching to October with its postponed AI feature suite, aiming for nothing less than perfection. Meanwhile, their stock is climbing a cautious slope, poised around the $200 support level, with eyes set on that upcoming earnings report. On the other side of the spectrum, MongoDB is facing a legal maelstrom with 3 class action lawsuits, casting a heavy cloud over its stock and investor confidence. Hungry for more tech drama and juicy updates? Smash that like button, subscribe, and share the tech love. And don't forget to swing by tomorrow for another action-packed tech news roundup. Catch you then.